If you are a fan of the trading with the moving average and Ultimar with the Alligator technical tools, get ready for the Eastern strategy. The Alligator is the trading indicator created by the famous trader Bill Williams, which, just like moving average, is used to confirm ongoing trends and their primary directions. In addition to identify the existing trends, you can also use the Alligator indicator to enter the counter trends moves. Alligator is the trend following tool which follows the premise that financial markets and individual stocks trend just 15% to 30% on time, while greening through sideways range on the other 70% to 85% of the time. The indicator has the full name. It comes from the head of the alligator. As a part of the are the three averages. Each averages had the name related to the navigator mouse, jaws, teeth, and the lips. The navigator analogy is designed to help to acquire some of the behaviors of the markets as it goes from the non-trending to trending. The idea is to the absence of the trend in the market, meaning produce of sideways movements is like sleeping alligator. Eventually the alligator wakes, and the longer it happens, it slept, the hungrier will be. Other words, the more produced the trend will be. I know this analogy might seem funny, but don't exit the video yet. And let me explain the future of the usefulness of the indicator. Bill Williams has considered that the successful trader will know the structure of the market. In the keeping with the line of the thinking, the alligator indicators consists of three moving average, each smoothed over different time frames, which he called balance lines. By looking at the behavior of the balance lines, we can determine the structure of the market. In other words, where we are dealing with the sleeping alligator or not. So alligator used three smooth moving average set at 5, 8, and 13 periods, which are the Fibonacci numbers. The three moving average compares to the jaw, teeth, and the lips of the alligator, opening and closing in the reaching to the evolving trends and trading ranges. Green moving average respects the lips alligator and is set to 5 and displays into the future by 3 period. Red moving average is the navigator teeth and is set to 8 period and is pushed 5 period into the future. Blue represents the jaw of the alligator and it's set to 13 period and displays 8 period into the future. Now, how to use alligator indicator in trading. There are three keys piece of the indicators shown. The alligator indicator is absence of heck, the information of the trend and the direction of the trend. So let's discuss each of these and see how we can use them with alligator indicator first. The absence of the trend, this is common state. It's indicates by those times when the line of the alligator indicators are close together to interested. We can see it is in this example where the green and the red, the blue lines are stick close together. This means that the alligator is dormant and what the market is not really going anything, and that we are awaiting a change in the state. So When the three lines are increased, we don't have the trend. This is generally a time of the low volatility, and you may want to find another instrument to trade next. The formation of the trend is a successful awakening of the alligator is the crossover of the fast green line through the slower lines plus the slower lines following the direction and all three lines spreading apart. When the moving average moves wide apart, like in this example, the alligator is woke and eating. The longer the alligator has the range remain, the hungrier it is. I know it's cringy, but think the market that is the ranging, we know it will break out. And the longer the range continues, the more violent the breakout can be. These periods of the persistent trends are when the indicator trends to be more effective. So the whips of the alligator, the green line, the fastest moving average will be the first one you will want to mirror. You want to see the green line cross the bows of the silver moving average. You will also see the lips and the jaw start to return in the direction to the green line. As an entry point, many traders will enter market following the candle close below all three lines. Third phase direction of the trend, the direction is indicated by the movement of the balance lines. The green lines is our faster moving average, and we expect this to move first, followed by the red line and then the blue line. The green line crossing above the slower lines represents the buy signals, crossing below represents sell signals. If all the three movement higher, and when it confirms an uptrend, if the balance lines move downtrend and wide after a sell signals, it confirms a downtrend. As the trend comes on the end, the balance lines draw closer together. The fast green line crossing back over the slower lines is the signal to take your profit. The key strength of the indicator is the way that it helps you to stick with the persistent trend. One of the downtrends is the difficulty in successfully reading the opening signals in the time manager. During sweeping periods and the indicators, you will see the many crossovers that looks like the trading signals. The trouble is that simply because if the indicator lags at the start of the downtrend, for example, and the fall was step, you could potentially miss the move. The classical way of the alligator is to look for the perfect order. The three moving average should not cross. When doing that, the perfect order forms. Moreover, this signals a strong trend, but this isn't the only way to use it. Remember that this indicator shifts the moving average future in time. This shifting allows for the great flexibility. In a way, it resembles the Ishimoki cloud. Traders familiar with the cloud ranges that the Kumo is shifted on the right side of the chart. Therefore, future support and the resistance level appeared at the present times. A useful alligator trading approach deals with the support and resistance level, and these levels are not horizontal. You see traders sometimes make the fatal mistakes believing that the support and resistance can only be horizontal. But they're also dynamic levels. Dynamic support and resistance level along with the price, therefore they often more value. As removing average that makes the alligator indicator do exactly what they follow the price. If the price rising, the three lines follow the bigger, and the distance between the lines, the stronger in support and resistance area. The bigger the time frame, the more difficult for the price to break through. In this way, the area between the first line, green one whips, and the last line, the blue one jaws, is dynamic support and resistance. For example, in the bullish trend, it shows support. In the downtrend, it shows resistance. When the Alligator is the feeding, watch for the pullbacks against the main trend directions and the trade those move with the pullback strategy. So here we have the bullish trend with the Alligator offering dynamic support. It starts from the green line and ends with the blue lines. The whips offer weak support. If bears push stronger, they might reach at this. Jaws represent the final support. Any move beyond and the trend is in danger. Another useful Alligator approach consists of analyzing the crossover. That means the crosses between the three lines that makes the indicator. A typical approach is to use the faster average, the green line, for supporting take crosses. When the green line crosses the red one, and then turns again without reaching the blue line, a fake move just forms. Hence, in the bullish trend, you can search for the long existence after this crossover, or its bearish trend. Go short when the perfect order gets back into place. Probably you are familiar with the golden and the death crosses concept. It calls for the two big movement coverage crossing. When the fast one moves above the slow one, a golden cross forms. This is bullish. When the death cross appears, the other side is true. Bears are in control. The Alligator could offer similar interruptions. The secret is to use the bigger average in the same way. Therefore, use the red and the blue lines as the fastest and the slowest average. A cross like this shows the type of the market, bullish or bearish. Furthermore, use the green line of the Alligator indicator as the confirmations. Alligator indicator provides a useful visual tool for trend recognizing a trade entry theme, but it has limited usefulness during chopping and trendless periods. Alternative, you could try using different tools such as momentum indicators or the different oscillators to look for the price movements divergence as the way of confirming your trading signals. As always, if you learned something new or found value, leave us a like to show your support. Subscribe to our channel and hit bell icon to stay notified when we upload next video. Until next time.